Welcome to Dr. Fred Markets. This is not financial advice. Every day, the world of finance, crypto, and artificial intelligence moves fast, really fast, and staying informed is the only way to stay ahead. That's exactly what we do here, together. Let's get into today's video.
Markets are begging for war while you're praying for peace. Britain's defense minister just quit in a tantrum over not enough defense spending. Hours after defense stocks finished the week green, while oil puked 2.3% and Bitcoin sat frozen at 63.5K like a sedated dog. U.S. wholesale inflation just spiked again because Iran keeps shaking the oil market, yet the S&P grinds calmly higher, and the AI darlings like Nvidia drip a lazy 0.4% like nothing happened. And in the middle of that circus, retail degenerates hurled more than $70 billion in orders at a not-even-public SpaceX IPO, while Rocket Lab got kneecapped almost 13% in one day. That is the purest FOMO signal you will see this quarter, and nobody on CNBC will say what it really means for your portfolio. Here's the uncomfortable pattern. Governments are under pressure to do something on security. Britain just lost its defense chief over spending, while actual military and security risk keeps feeding into inflation through oil shocks and supply chains. At the same time, markets shove insane money into future war infrastructure like rockets and space tech, while ignoring the boring line item that quietly decides who wins the next conflict: cyber. SpaceX rockets get the memes, but cybersecurity stocks get the contracts. And the one thing modern war actually runs on is software that doesn't get hacked. You don't win a conflict today by dropping more metal. You win it by keeping your satellites, data centers, pipelines, and payment rails online, while the other guy's screens go black. So here's the lesson. You are staring at the wrong battlefield. Everyone drools over rockets. The real leverage hides in the companies that defend the pipes of the digital economy. Let's break this into one concrete thing you learned today: how to read defense FOMO as a forward indicator for cybersecurity profits. Not vibes. Mechanism. Start with oil and inflation. U.S. wholesale inflation ticked higher because Iran keeps playing games with oil flows. Higher input costs crush margins for boring businesses. What doesn't get crushed? Mission-critical security spend. Nobody tells the CFO, yeah, let's save 0.5% on margins by turning off the firewalls while Iran and Russia are poking our energy grid. Security budgets get cut last. That's rule one. Next, look at the SpaceX frenzy. Over $70 billion in retail orders for a private listing means one thing. The public wants exposure to defense-adjacent tech, but they have no idea where the actual cash flow sits. SpaceX is sexy, but most people can't even buy the thing directly. So they chase anything with a rocket on the slide deck and get wrecked when names like Rocket Lab face a bad headline or schedule slip. Volatility, not durable cash flow. Signal 3, politics. A defense minister rage-quitting over budgets in a G7 country is not a meme. It's your reminder that the next election cycle in every rich democracy will feature one theme: we underinvested in security.
Let's pause for a second. Ask yourself this. Do you really understand what's happening in the markets right now? Do you know how this affects your money, your savings, your future? Most people don't, and that's exactly why you're here. Let's keep going.
And politicians don't differentiate between missiles and malware. They just shove money into defense and security line items. The vendors with recurring revenue and long contracts are your real winners. So what does this triangle, oil shock, rocket FOMO, political panic, actually spell? Institutional re-rating of cybersecurity from IT expense to national security asset. Once that switch flips, the market stops treating security companies like optional SaaS and starts valuing them like infrastructure. Long, boring, defensive cash machines. Here's your mechanism in one sentence. Rising geopolitical tension forces governments and corporates to overpay for reliability, and cybersecurity is the cheapest reliability upgrade on Earth compared to building more tanks or more refineries. Action time. Again, this is not financial advice, but it is the uncomfortable truth. 1. Map your exposure. You already own war risk through oil, indexes, and inflation. If Iran or anyone else keeps rattling sabers, your groceries and mortgage get more expensive whether you invest in defense or not. Ignoring the sector doesn't keep your hands clean, it just keeps your portfolio dumb. 2. Separate toys from toll booths. Rocket makers, space dreams, moonshots, those are toys. fun, volatile, story-driven. Cybersecurity with government contracts, critical infrastructure customers, and recurring revenue. Those are toll booths. Money passes through them every month, war or peace. When you research, look for three things: share of revenue from government or critical industries, high renewal rates, and long-term contracts. If those numbers are fat, you're not trading vibes, you're renting a toll booth. 3. Stop timing headlines. Start timing budgets. Defense security spending doesn't react to a single attack. It reacts to committee meetings, budget cycles, and elections. The SpaceX IPO craze tells you retail is already emotionally there, terrified and chasing anything with rockets. The professionals front-run the budget cycles instead. They accumulate the boring cyber names while everyone else screams about oil for a month and then forgets. You don't have to touch any security stock if it offends you. But understand the math. The modern battlefield runs through cables, chips, and servers. Rockets are theater. Cyber is rent. This is not financial advice. It is just the reminder that peace activists don't write the budgets. Nervous politicians and paranoid generals do. Your job is to read their direction of travel before the headlines catch up. 3 takeaways. 1. Oil shocks lock in higher inflation, which protects security budgets. 2. Retail's $70 rocket obsession screams mispriced cyber. 3. If you accept war risk on your bills, you might as well at least understand how the defense security cash flows work. Subscribe if you want tomorrow's ugly truth instead of today's pretty story. This is not financial advice. If you enjoyed this video, please subscribe to the channel and check the links in the first comment below.
That's it for today on Dr. Fred Markets. I hope this gave you clarity and a new perspective. Remember, this is not financial advice. Always do your own research. If you found this useful, subscribe. It's free and it helps the channel grow. Find me on the blog at drfredmarkets.com and join the newsletter via the link in bio. I'm Dr. Fred Markets. See you in the next one.